Welcome back, and I'd like to invite my panelists, Dana, Gadi, Lukanos. Please join me on stage. Thank you for coming. Let's start with a round of introductions. So, Dana, ladies first.
Hello, everyone. Good afternoon. We got the hardest slot after lunch. So, good morning. Can you hear me? Okay, great. So, hi, everyone. My name is Dana Bublin. I'm investment manager at Target Global in Israel. Target Global is a pan-European VC. We manage something like 3 billion euro under management. Our headquarters is in London, and besides that, we have offices in Germany, Tel Aviv, and soon to be in Abu Dhabi. That's it. We're pretty generalistic, so everyone are more than welcome to speak with me afterwards.
Hi, my name is Gadi. I've introduced myself briefly before. Maybe I'll say a few more words about the fund I work for. So I'm one of the partners in the venture arm of the Bosch Group. Bosch is a private company, about 140 years old, around 90 billion euros in revenues. And the venture arm has been set up in 2008 as part of a general agenda of open innovation. We're currently managing our fifth fund, which is a 250 million euro fund. In total, all the funds up till now have been around 900 million euros. And most of our investments are usually in deep tech companies, normally in A and B rounds. Sometimes we would do late seed investments if there's a good enough reason to invest early. And sometimes we obviously would go later stage. We do everything from leading rounds, co-leading rounds, joining others, follow-ons, sitting on boards, the whole 9 yards. We've been in Israel since 2009, have invested globally in about 80 companies, in Israel in about 12 companies. And that's it. Happy to speak with all of you later or online, or as the case may be.
Just clarify, Dana, from early stage, or what stage are you in?
So we have both early stage and growth funds. Early stage, it's pre-seed until post-A, I would say, and growth will be B and until pre-IPO.
And Gadi, what stage?
Oops. I mentioned that from late seed,
Sorry.
A and B, and sometimes we could do even later rounds, but depending. Usually we try to be a meaningful investor holding 10 to 20%, at least in Israel. This has been the case so far.
Lukanos, please tell us about yourself and the fund.
Hello, I'm Lukanos. I'm from Austria, Vienna. I've been GP at the fund called Speedinvest. Had a spin out called now Calmstorm 4 years ago. We are the most active digital health investor in Europe. We invest in software only, no hardware, no molecules. We invest in the first and second fundraising round of companies. We actually have invested in Israeli founders, but not Israel registered companies. They are registered in the US or in Europe. We have a co-investment with Target called Healthforce AI, and I'm happy to speak to you.
Thank you. And my investor role is direct round, and we do early stage investments, really, really early, and two good people and a technology. I think we also have 1 or 2 joint investments. Good. So we'll kick off with Gadi. Other than AI, okay? If anyone who mentions AI on the stage has to drink. No. Other than AI, what is the hottest sector you see growing in Europe now?
I think one.
One.
Okay. I think you see a lot of robotics and robotic application developments in different dimensions and areas. So not just in industrial robotics, but in other areas as well, and in various parts of the stack. So that's one.
Dana?
So, first of all, I don't like the meaning of hottest because it means nothing, in my opinion. I think that it also depends if you're referring to early stage or growth deals. But if I will go to the more early stage side, because this is what I know better, I think that in supply chains we see many interesting things in the past few months. Also because lots of regulations that has been changed in Western Europe, and I think that in the later stages, probably semiconductors. I know that Germany alone invested tons of money in the recent years only on that. So I think that probably these two.
And Lucanos, other than health tech, what is the hottest?
I can't say health tech. Okay, other than health tech, I would say defense tech.
Okay, thank you. Now, if we look at funding, there are a lot of rumors that funding is not available, downturn, things like that. How does it look? Does any of you guys stopped in investing in the recent, let's say, 12 months, or?
No, but it's
Likewise.
yeah, it's becoming much more difficult for international investors in general to invest in Israeli companies, sadly, given the situation we've been experiencing here, that not just since October. It started at the beginning of last year. And I think Israeli companies need to be exceptionally good to meet the bar and kind of overcome these skepticism, even though some of them are not exactly justifiable, but still.
Dana, did you stop investing?
No, but I think we're more suspicious than we used to be. And I think that the FOMO that we all had in 2021 is gone. And I think, again, now the bar is just much higher than it used to be. So if 2 years ago it was due diligence of 1 or 2 weeks, in order not to miss the deal, etc., and now we all, by the way, regardless Israel, in my opinion, we see it in Europe as well.
Sure, we're talking Europe and Israel.
So I think that, of course, that the situation here is not helping, but I think that overall, globally, I think that the situation is challenging. But it's part of the VC life, right? Like we have waves, and this wave will over.
Lucanos?
So I'm investing in talents, not industries, and I mean that's why I don't care where the company is based. We have invested in Israeli founders, and we will invest in Israeli founders, no matter what's going on south of Tel Aviv. What I have to say is that in 2020, when I started my fund, we did 18 investments. In 2021, when everything went through the roof, we did 17 investments. In 2022, we did 18 investments. And last year, we did 18 investments. So we don't care about those cycles. We do our business plan, which is 18 investments a year. This is a lot compared to other funds. And that's we do that because we invest so early, and we believe that 2/3 of our companies won't make it to Series A. That's why we need 50 to 60 companies. That 1/3 of them is a proper Series A portfolio, which is the aim of Calmstorm. We see that it's much harder for the average startup to get funded, but those startups that are really good, they get more money than they would get in the past because there's so much money available, there's so much dry power out there. So when we invested in Lindus Health, a company out of UK doing software for pharmacies, we invested in their pre-seed round. It was a total normal pre-seed round, 1-point-something million. And then all of a sudden they jumped over seed and raised this 18 million Series A. Why? Because Creandum jumped on them and said, this is such a good deal, we double down, and there's so much money available. So I think there is no funding crisis overall. There's a funding crisis for average startups. They don't get funded right now.
Thank you. Now, Gadi, will AI replace us as investors in 5 years?
Yeah, I'm actually an AI version of my old self, if you haven't
thank
noticed
you.
that. My old self is somewhere else, having
No,
fun.
I'm with you. Dana, can you touch him to check the haptics?
No touching.
No touching?
I thought we are not allowed to say AI on stage.
No, not as a sector.
I think, to your point, your question, well, I think it replaces certain functions of our work and will replace more and more functions of things that we do. There are good AI tools that make our productivity as investment managers higher. It's still a relatively complex thing to invest in because it involves a lot of human perception. Now, if we could ideally analyze every person, every entrepreneur in a complete manner, maybe AI would replace it at the end of the day. Probably that's maybe some time away. But I think for the time being, until all of us are retired, we have a job, I hope.
Dana, what's your take?
No comments, I agree. Besides the fact that my career will be probably, later than yours.
Yeah, probably.
Lucanas, you invest in people, so...
So I have a different view. Venture capital has two functions. One is the general partner, taking decisions on people, on kind of, taking risks, investing in teams, more or less. At least that's my view of venture capital. And then there's a second function that I would call venture capitalist, which is not taking decisions on deals. And this is the process how to get to the decision. And that second one, that function of a venture capitalist, there will be a lot of technology, not so, helping and supporting to do that more efficiently. That's for sure. But that AI will take the decision on an investment in a founder, I doubt, because we are already wrong so many times. And we often have no clue whether that company is going to be the winner and repay the fund. And often, if you see that, I don't know whether you do that as a startup, but as a fund, we do that on a monthly basis. We have this map of our winners and losers and potential winners and so on. And these maps changes and changes and changes. So we have no clue in the end. It's a long-term game, and the feedback loops are so long. So anyone who thinks that a software can replace and kind of that function of a person's experience in investing and taking risk, I doubt.
And actually, maybe just when you spoke, I just thought about it, that actually AI based on models. And I think that
there are no models.
Exactly. I cannot think about, of course you can take the big data of all the, the big unicorns in the world and to try to identify the, what is similar and what is different between them. But probably you won't find anything, that will be able to be modeled. So I think that, again, by the way, I think that in later stages, probably it's easier. Because again, you have the multiples, you have the comparables. It's it's
data points.
It's more like a math. I think that in early stage, for sure, it's basically based on gut feelings and experience. So besides that,
and there's one more thing that in later stage it will help tremendously to say no, but it won't help to say yes.
Okay. I think differently, but we'll skip it. Let's go. If I'm a startup, I'm going to raise in Europe. In Israel, the typical process is to have an executive summary, a deck. How does it look in Europe? What do I need to prepare for a good fundraising?
With us, you mean?
With you or with any your colleagues?
I think every fund is different. I really think every fund is different. And if you as an entrepreneur, you're not prepared, you don't know what the fund is doing, whether there's a sector expertise, a thesis, and so on, it's just a waste of time. So you're not going to get money from that person you're talking to without being prepared and knowing what the person is after, right? Today, someone pitched me something that it's not even, like, it's so far away from our thesis that, like, 10 seconds on our website would have been enough information gathering to know that we're not investing in that stuff. So that would be first. I think every fund is different, and then if it comes to us, it's very easy because we look at every deal that comes to us, every single one that comes through our website. There's a 15 questionnaires, and you upload a deck, and in 90% of the cases, it's a clear reject because it doesn't fit our thesis because the people load that up before looking at our website. And then in those 10% of the cases where they actually were prepared and it fits our thesis and the founder says, I believe it fits in your portfolio because of X, Y, Z, there's a high chance that he's going to get a call with the partner.
And apart from a deck, do I need a profit and loss forecast? Do I need a
Any
sales
forecast in our stage is fake.
Okay.
So I
What
don't think
about
that
the European colleagues?
I think that the pre-seed and seed investors, no matter whether the big funds like Speed Invest or the small funds or the medium funds like the 9.9, I don't think they need a P&L. What they need, you need to be able to show in somehow a calculated way that that you have a business model and that makes sense and that your assumptions can be kind of, thought through and that. But the numbers, the actually result, that doesn't matter.
Dana, you wanted to say something?
No, I agree, and I think that I don't see any difference. And I also I got prepared yesterday, so I spoke with my colleague in both in UK and in Germany, and it's pretty much the same. I think that as long as the founder that come to meet you / sending you an email or LinkedIn message is well prepared, and he understands both, what you're doing as an investor, but also what he's doing as a founder. That I think that when founder comes to meet us, he needs to know his field better than us. If I can challenge you in the first meeting, which we're generalistic, so I probably know between nothing to almost nothing about your field, it will be very disappointing, to be able to challenge you. And also, I think that honesty and, not to try to sell dreams, it's good. And it's good to be, to have a vision. But I think also to be able to say, listen, we have A, B, C. These are our challenges, We're not figuring out everything, but we're on it. And to make me feel that I can trust on you and work with you, because it's a very long-term relationship in our case. I think this is, for me, probably... And by the way, and again, I think it's globally. It's not only in Israel. Especially not in early stage.
Gadi, you wanted to say something.
I don't think there is any difference between what we expect from companies in Israel, in Europe, in China, or the US, and we are active in all these geographies. It's not that everything is uniform in terms of the material you get, but it is what it is. It definitely changes by stage of the company, so you do expect a different emphasis and different level of detail the longer the company's been around and the more mature the company is. That is pretty clear. And I fully agree with Dana that if I can pinpoint two competitors to the company that they didn't know about, that's usually a very bad sign. So, you need to know your shit when you come and try to sell it to others, because in most cases, as the point was made, we're not the experts, you're the experts, and you're the person or persons that would need to take this ship and sail the seas and get to a safe harbor. Not us, well, together, but you're in the lead.
May I add one thing? Because that's a crucial point. The competition is a crucial point. So in our stage, in the super early stage, I think it's sometimes hard for founders to know about all the competitive other founders, because first, they're not in the market to search for them, and the second, a lot of founders actually only talk to investors that they built something, but they don't talk to their peers. So it's sometimes hard for them, unless these startups are already in the market and whatever, then you should know them. But what you always can know, always and every time, is who is actually investing in these kind of companies. And if I ask them, have you talked to X, Y, Z, or do you know, what is that's my standard question, what is your favorite investor? And they don't know the funds that specialize on cases like them, then I think they're not well prepared.
Okay. Last question before we open to the audience. exit, how does the exit landscape in Europe look like? How do I exit? If in the US I can do an IPO, what do I do in Europe?
No IPOs in Europe.
So how do I get money?
I can only sell through an M&A transaction.
M&As. Dana, any other way?
Yeah, I think we had the IPO of Auto One actually a few years ago, and we had also Delivery Hero a while ago. But yeah, it most likely will be M&As.
M&A if within Europe, but if you're a good company, you should float on the US and stock exchanges, of course. At the moment, the whole stock market window is not exactly wide open, so it's a very challenging period for exits in this route at all. Yeah, but the good companies exit. This is the nature of the business.
Thank you. Let's open up for questions. Please. Raise your hand, ask a question. Oh, we can continue talking for hours, but don't worry.
Okay, thank you. So, with the challenge of raising money today for entrepreneurs, to what extent do you expect to see companies in early stages to come to you already with revenues? Because from the entrepreneur side, it's a focus question, right? We can focus our time on activities that will generate revenue or not. But we happen to think sometimes that this is something that VCs or venture capital wants to see.
So users versus dollars, what do you prefer, if at all?
Again, I think it's a very much, it depends on the stage. If you want to raise from him and we have no revenues, good luck, right? But if you're raising a pre-seed round based on a deck, where should the revenues coming from? I think there's two revenue streams. There is real revenue and there's fake revenue. And you better come with real revenue, because otherwise it's just a POC or it's fake revenue, and it doesn't help you actually, because then we place our bet on that fake revenue, and that puts you very much in trouble afterwards. And our model is that you get the next funding round. My work starts when I invest. So I have to be very sure that I can get you to the next round, and if my investment is based on fake revenue, I'm in trouble.
But wait, look, Hans, you would invest in a startup without revenues, correct?
Rather without than with fake revenue.
Okay.
Sorry. I would like to add something. I think it depends. And it depends on the business, it depends on the company, and if you're a founder and you're building a business that you think you need to a critical mass of users before you're going to deal with revenues, and you think this is the right thing to do, and you're unable to convince me that either I'm really stupid and you don't want my money, or you don't know your business well enough, right? I expect you, because in certain cases, the thing you should do, for example, if you're an open source business, you're going to build users for a long, long time before you actually start monetizing, right? And if you start monetizing in day zero, you're not going to really be able necessarily to build your user base. So it depends on the business. And on the other hand, if you're selling whatever widgets and you want to sell many widgets to many households, if you don't sell them for money, you're going to not just lose money. So it depends. And we're not just, it's not a very binary machine that, okay, we are a B round investor or A round investor, you have to show me revenues. No. You have to show me an interesting business plan applicable for the business you're building.
And just to add on that, I think that more important for me is to understand, why do you want to raise money? I think that there is misunderstanding, by the way, especially in Israel, because it's the startup nation and everyone wants to be entrepreneurs. I think that there is a huge difference for me between to be a very good business, profitable, growing, amazing business, than to be a startup. It's absolutely two different things. And for me, in early stage at least, I want to see traction, and I want to understand that you understand and you convince me that once you will have revenue, it doesn't matter if you don't have revenues now, it's going to be, exponential, and it's going to grow fast, because this is what startup is. But I can tell you that, we invested in early stage companies that had revenues, and we invested in B rounds of companies in food tech, for example, where the R&D and the regulation, it takes time, and we understood it, but also understand that it's binary. It's either, once they will have the product, it will be huge and will change the world, or not. That's why I can bet on them. But, but if it's a B2C business, with no revenues, no traction, and I can find another few of them outside, so it probably can be a good business, but not a good startup. Not a good investment, at least, but it's not the same.
Another question?
Gad from Sunshine Robotics. You all talked about M&A. So 2 questions. One, what's the time frame you expect when you invest to have an M&A? And the second, what's the multiplier? I mean, you invest X dollars, how many dollars do you expect to get at the M&A at the end?
Look, every founder asks us how long it takes until we want to sell, or until he can sell it. And I always say the same, as fast as possible and as late as reasonable. Because there's no time, right? Everything is different. And if you're building Facebook, or if you're building AI, and now I'm saying AI, for a hospital CRM, it's different. So funds usually have a 10-year lifespan. None of the funds I know have ever closed within those 10 years. So we don't know. But it should be reasonable. So there's no point in delaying a sale, but it should also not be the first goal in your career as an entrepreneur, to find a sale as soon as possible. Especially us, we don't like that if you sell too early, because then our return is not good enough. So if I get the feeling that a founder would run away with 20 million, if someone puts him 20 million on the table and he is off and builds his house, then it's not an investment for me.
But if you need a magic number, so 3x probably will be a reasonable good number, right? From early stage investment, I would say. When someone invested in you, sorry, one more sentence. When someone invested in you, when an investor invested in you in early stage, it wants to know that it takes into consideration the fact that you probably will fail, 90%, or you will return the fund. So everything in between is reasonable. I can be happy with companies that were sold in 1x, in 2x, and in 5x, and in 15x. It depends on the company, on the field, on the market, on the time. It depends on so many things, but the magic number for fund, they want to have an average of 3x within the fund.
We have to stop in favor of time. Sorry. So thank you very much, all of you.